For more on the latest market moves, let's welcome in that strategist right now. That would be Scott Chronert, Citi head of U.S. equity strategy. Scott, it is great to see you. So, listen, I was just talking to Julie there. We're in rally mode today, Scott. We have these reports. Maybe President Trump could be softening his stance on these reciprocal tariffs. Do you look at this market action, Scott, and tell your clients, you know what, maybe the worst of this recent pullback is in the rearview mirror, Scott?
Well, I think we're pretty comfortable that the 5,500 level has been a level that we've talked about for the past 2 or 3 weeks that we think gives you a pretty good risk reward, where we know that we're going to have some form of tariff overhang that's going to be with us for some time now. I think you guys were right on with your earlier comments, Josh and Julie, in terms of, when you're looking at tariffs, it's a combination of magnitude of tariffs and also duration. And to your point, we also know that the tariffs, the broader tariffs, are going to be an important element of the revenue raise component of the broader, Trump policy. Now, at the same time, we also know that investors have been concerned about tariffs for, at least 6 months, if not a year, if not longer. And so to a certain degree, a lot of the angst has been getting priced into the markets. And I think what you're getting, as you point out, is with a little bit more sign of some rationality around the timing and magnitude that you give the market room for a short-term move to the positive right now.
So I guess then the question would be, Scott, what is the base case that you're assuming on tariffs at this point? And is that, in fact, priced into the market, even with the bounce that we've seen over the last week or so?
Yeah, so the base case that we've been talking about, Julie, for probably going on 6 months now, is that you give me an across-the-board 10% tariff, okay, and all things equal, we think that is roughly a 6 percentage point drag on the S&P 500 earnings outlook. Now, keep in mind when we talk about tariff impacts, many will go down the path of saying, tariffs are going to be net inflationary. Our view is maybe, but we think the bigger issue is probably in the gross margin side. As companies, we think will have a harder time passing through some of the price increases that come with this. So we're very sensitive to what's being priced in at the company specific level, where each company is probably going to have a little bit different persona in terms of how this plays out. Bottom line, I think it's hard to judge that we've been fully priced in until we get a little bit more clarity. We also think that going into the Q1 reporting period, be prepared for another bout of volatility, because we suspect that more C-suites will be talking about their views of how tariffs may influence their fundamentals, and the analysts are going to be responding to that. So net, we're getting a pretty negative revision dynamic at work right now. I think it's going to be very stock specific, though, as we go into the reporting period in terms of how this is going to play out. But generally speaking, we think a lot of the angst is mostly priced in at this point.
Scott, I want to get your thoughts on the Magnificent Seven as well there, Scott. Some of those names have taken it on the chin, of course. If you look at the MAGs, the ETF that tracks that group, it's down more than 10% year to date, though it's catching a bid here today. Scott, I'm just curious to get your thoughts on the Magnificent Seven.
Okay, so let's talk about this. So index from the Feb 19 peak to the week ago Thursday low was down about 10%, S&P 500. The Mag 7 from their 52-week highs were down over 20%, with certain of the components down even more than that. What that had done, honestly, is take the valuations for that component of the market down to a less negative area versus its 20-year average relative to the other 493. So what we've been arguing, Josh, is that from that point over the past couple of weeks, this growth is defensive component and element, as you think about the Mag 7, comes back into play. We think their fundamentals are in pretty good shape in terms of expected growth trajectories for this year. We're not sure we can say that about the rest of the index as we go through tariffs and as we go through signs of economic sluggishness. So all told, our view here is that the mega cap growth cohort led by the Mag 7 takes on a little bit more of a growth as defensive bias as we go into the quarterly reporting period.
So just to put a fine point on that, obviously people have a lot of Mag 7 already, right? Most people in their portfolios. Would you suggest adding to that here as we have seen this sell-off? Or do you think just hold on to it? It's an area to perhaps shelter or ride out the coming volatility.
I think it's the latter point, Julie. We want to hold on to those positions for now. You're in betwixt between in terms of, do you outright sell or do you buy into pullbacks? I think there has been a lot of element of lightning. The price action down 20% plus in aggregate tells you that that's been going on to a certain degree. Fundamentals are very good shape. What I would say, though, is that we've been saying for some time that what you have to expect is less of a decisive price action for the Mag 7 versus what you got in 23 and 24. So we've been all about broadening as a bigger thesis going into this year. It's acknowledging that the Mag 7 are going to be an important component of that, but they don't necessarily need to be the driver of aggregate index returns as we go through the balance of this year.
And Scott, when you're talking to your clients right now, what sectors do I want to be overweight in?
Well, I think the ones that are probably getting the most attention, quite honestly, we went overweight healthcare going into this year after being underweight last year. And it's a sector that had really multiple contracted over the past 6 months and had fallen quite out of favor. So we think as a defensive sector, that's kind of back to life. On the tech side, where we've been market weight, we've been more focused on the semiconductor component. So for that growth exposure, we like semis as well as the media entertainment or internet companies. So we're focused on there. We've had an ongoing positive view towards the financials. And for an added twist, we have been overweight energy going into this year, which has actually been a pretty decent outperformer. So we think there's a very good balance to be drawn here between growth, classically defensive, and even classically defensive as well.
I was also struck, Scott, in a recent note where you talked about that money that maybe had been going, sort of down, I think down market is what you call, down market cap to the small and mid cap space has been flowing into places like Europe instead. Do you think that that is indeed where people should be looking? Because it sounds like you still think maybe there's some opportunity in those small and mid caps.
Yeah, so I think the small mid-cap space is still in a tough place. We need to see more evidence of a traditional fundamental turn to the positive, which we haven't gotten yet. I think that exists on the other side of the full brunt of the tariff proposals, but we're not there yet. In the meantime, in Europe, what you're seeing is a very clear early cycle dynamic where the ECB is in position to ease further. But importantly, a lot of this focus on, let's say, the European economies paying their way, particularly on defense spending, is adding a new fiscal impulse to the positive there that we haven't seen for some time. So the Europe outperformance potentially has some legs here, but also what we've noted in terms of the movement down cap, the S&P top 50 had been such an outperformer over the past 2 years, but so far this year, the top 50 has been lagging that component of the S&P below it. So what we're seeing is some broadening within the market, according to sectors, and additionally, I think this push down the international path is starting to raise some eyebrows as well.
Scott, great to catch up with you as always. Thank you.